New friends, new opportunities, new partners, EG Tax.
Hi, I'm Esther Golias, the tax lady from EG Tax, where this is the show Ask the Tax Lady on WBBZ. Every Saturday from 3 to 4, we're on WBEN, and I got my right-hand people here, Tiffany Fabian and Christopher Fabian, and we're the brain trusts of EG Tax, and we're helping you to know about all the tax law changes that affect you and all the deductions and how your taxes work, and we do this every week. And so whether you watch us here on Wednesdays or listen to us on Saturdays, or if you use us, and we hope you do, we have 30 area offices to serve you. Our corporate headquarters is located at 1890 Colvin Boulevard in Tonawanda. And if you have any tax questions, you can go to our website at egtax.com, and we'll help you. We're going to take a short break. We'll be back with your questions on the other side.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. EG Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call R.J. Gallo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgallo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let R.J. Gallo Companies put their 40 years of experience to work for you. Call R.J. Gallo Companies at 716-675-1500 or visit them online at rjgallo.com.
Hey, I'm Esther Golias, the tax lady from EG Tax, and this show is devoted to making you smarter with your taxes and to help you with your tax situation. And I have Christopher Fabian, Tiffany Fabian, who have the same last name because they're married to each other, and they happen to be my kids. And he's my son-in-law, my daughter, and yeah, and we're here to help you with your taxes. We have our roving reporter out in the field with your question. And Dan, what do we have?
Hey Esther, we have another email coming in for you. This one comes from Tammy and Clarence. Tammy says, I have 3 children who I support. The oldest is 19, and then 18 and 17. The 19-year-old is working part-time, but only made $6,000. The 18-year-old is in trade school, and the 17-year-old is still in high school. Do I still get deductions from them?
Okay, so we have a 19-year-old, a 17-year-old, and a younger child.
The worst problem, I don't think the 19-year-old is going to college. So 19-year-old working part-time, made 6. The 18-year-old is in trade school, yay. The 17-year-old is in high school.
All right, so first of all, the youngest child is under the age of 17, so she's going to be able to, I'm assuming it's a lady.
19, 18, and 17.
17.
Oh, the 17-year-old. All right, is 17, be able to claim, but the $2,000 child tax credit for children under the age of 17, she would not get.
You should talk about, that's a sweeping difference this year.
It is
the $2,000.
That's right, because each child under the age of 17 is worth $2,000 with a $1,400 refundable feature, but she loses that. What she's going to get for that child is the $500 family credit. right? So she'll get that. The next child is in school.
Is
Sounds
18.
like it's
A
a
trade
full-time,
school, yep.
we're assuming it's full-time. So that child sounds like it doesn't work, would still be her dependent, and she gets the American Opportunity
Yep,
Tax
and then
Credit.
she also
As long
gets
as
the $500.
It's a federally accepted,
Fundable, right.
fundable
In other words, if they could
institution.
get a loan.
Financial
right,
aid.
That's it.
And then that person would also get a college credit on New York State if that was true, that it was a place
Right.
that accepted.
Unless they had full scholarship.
Correct.
Right?
Right, and that
So-
person would also get the $500 for that 18-year-old too.
That's right, so she'd get the American Opportunity Tax Credit for
Mm-hmm.
that child, up to, what we talked about, let's see, up to
$2,500.
$2,900 plus the $500, $3,400 for that child. Then the last child, who is 19, made $6,000. Now,
Yeah.
you would think $6,000
You'd still
would
get the
not
claim.
eliminate somebody from a deductibility standpoint, but unfortunately,
It
does.
does.
It does.
It does.
They used to use the old
Personal
exemption
Right.
as the criteria.
right.
Well, now the personal exemption is 0.
But they're still using that-
the old
Right.
personal exemption, which was $4,050.
Right,
for-
so
So he
if you
made
make more
6.
than 4,050, now the interesting thing is that third child is not gonna owe any taxes, he's gonna get back all the money.
Yep.
Because the standard deduction as for himself is gonna be $12,000. So he's not gonna pay any taxes.
Right.
But mom can't claim them.
And
And of
that-
course, if mom, I'm assuming this is mom, if this taxpayer is single, she'd be able to be head of the household as well.
And I think, like you said before, $6,000 is not a lot of money, so moms or dads get really stuck on that, and they're like, we can't claim them, they're only 19. But like Chris said, like you said, it's that personal exemption, which is $4,050,
So
which
that
is
child
no
will
more.
do his own return. The kid in college gets the American Opportunity Tax Credit, federal, and the Empire State Credit for college, state, and the $500 credit for being the family member. And the child that's 17 would only get the $500.
Right, and then I would also say that 19-year-old only made $6,000. I think that he or she should go to college, because then mom and dad the subsequent year could claim them.
You should give them a call and say, by the way,
Yeah.
or a trade school. I think the important thing is that you want to get some type
A
of
skill.
higher credentials.
Right.
Because
yourself
whether it's
marketable.
college or a trade school, both of them will qualify for the credits.
Right.
You know, and let's talk about the 19-year-old.
Yep.
Okay, since we're on them anyways. If they were in school, okay, they made $7,000, right?
$6,000.
$6,000. Okay, last year, they still would have had to file a federal, and they probably, if they had withholding, wouldn't have got it all back.
Right.
If they had no withholding, they would have owed the money.
Right.
But with the new tax laws, a dependent, their income limit is $12,000.
Right, so they can make up
That's
to,
just unbelievable.
but on
that
the state of New York, though.
It's only
$3,000.
$3,000.
Right,
So,
so he's gonna owe money on the state,
yeah,
and on
it
the
would
federal,
get-
he's gonna
Well,
get
I just
it all.
want to say that change, it does. do with the
Remember, the
dependents.
federal and state like almost have nothing to do with each other, not too much. Okay, let's go on. Dom, we got another question here.
Hey Esther, we have another email coming in from Lisa in Kenmore. Lisa says, my husband and I retire but work part-time to pay for our health insurance until we can get Medicare. Last year our wages were around $4,000 a piece. Do we even have to file?
Okay, they don't have to file, do they?
They want to file.
But they want to file.
Right.
It's really interesting about tax law that people don't understand is that even though you don't have to file, you want to file because in this situation, since they're both under the age of 65, otherwise they'd be on Medicare, they would qualify for the earned income credit, assuming that they have no
They're
other
under the
source
age
of
of
income. So
65.
they basically pay you because you don't have much income and you're working, both the federal and the state. So no, you don't have to file, but yes, you want to file.
And as we've said before, if you missed this last year, you have 3 years to amend your returns. I would say they should come in and amend their returns because they have money on the
Or
table.
Even, or if they haven't filed.
Right,
Right.
well, let me
Yeah.
throw this into the ring.
Yeah.
Okay, first of all, the reason they're working is to pay for health insurance.
Right.
Well, their income is only $8,000.
So they get free health insurance.
They shouldn't have to pay for health
Medicaid.
insurance, they get Medicaid.
That's right.
And I know people are going, oh my God, it's Medicaid, I don't want to be on Medicaid. Totally different Medicaid.
Medicaid.
I know in classes this year, we were
Yeah.
talking and people were like, yeah, Medicaid, it's not, I said, that's old, it used to have this bad
Connotation.
connotation was, oh, you're poor, you have nothing. This, with the new Medicaid system, because of the marketplace, you could have $10 million in the bank. You can have
A mansion.
a mansion, 2 houses. And as long as your income is under, if you're married, I believe it's like $23,000, you get free health insurance.
Right.
Top of the line health
And I
insurance.
want to tell you, it is top of the line. So, yeah, so and I know you're sitting home saying, they must be crazy, but it's true. It used to be you didn't get Medicaid if you had assets. Now you can have all the assets in the world, but if those assets are not producing any income, you, from the state of New York, get free health
And-
insurance. And if you haven't gotten it, you can call EG Health Connect and we will help you. There's a free service that we offer. So just call EG Health Connect and we will help you to get free health insurance.
Yep.
Also, there's, for the people over 65, I totally lost my train of thought, but I wanted to say this too. People over 65 who are on Medicare, you think your open enrollment is over because that stopped December 7th. Actually, there's now what's called the buyer's remorse period, which is from January to March. You can change your health insurance, and that's what EG Health Connect can help you do that too, your supplemental health insurance.
Yeah, so like if you bought into something, you
Yep.
say, oh, this is not working, you
went
can
with,
fix it.
Yep,
Yep.
United Healthcare, and you realize United Healthcare isn't as good as it used to
Yeah.
be. You can switch now to Univera or Blue Cross, you can change.
Yep,
Right.
because like I have a family member and they're under United and they won't let them go at Catholic health hospitals. So if they say to themselves, I don't like this, there's buyer's remorse and they can switch to a different health coverage that would allow them.
Do you have to cry to have buyer's remorse?
No, but the other thing, it just popped back into my mind. This is the last year you will get hit with the penalties
Right,
for
right.
not having health insurance.
Very
I
important.
thought, everybody said in the
In
tax changes, it was
2018,
gone.
in
Right.
2018's return that's being filed now.
Yep, you
Right?
still will have penalties for not having
Right.
health insurance.
Unless you do an
2019,
exception.
there will be no penalty.
Unless you do
exactly
an
right.
exception, and these folks would be entitled to an exception because their income is too
Well, and
low.
the exceptions, I will tell you, they made much more liberal. So if you didn't get health insurance, there are very liberal exceptions to the penalty, and EG Tax help you with that. I'm Esther Golias, the tax lady from EG Tax. This is Ask the Tax Lady on WBBZ. We have a Saturday show on WBEN from 3 to 4 and weekly on WBBZ. We'll answer your tax questions. We're going to take a short break and we'll be back on the other side with your answers to your questions. So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. EG Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call R.J. Gallo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgallo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let R.J. Gallo Companies put their 40 years of experience to work for you. Call R.J. Gallo Companies at 716-675-1500 or visit them online at rjgallo.com.
Hey, I'm Esther Gully. It's the tax lady from EG Tax. This is Ask the Tax Lady on WBBZ. We're on Saturdays from 3 to 4 on WBEN. And basically, this show is to help you with your taxes, and we're answering live people's questions, and you get to hear us think about all the different nuances with taxes, because
And chew
it
it
ain't
up.
easy. I'm going to tell you. If you listen to us, you'll see it isn't easy. This is Tiffany Fabian, Christopher Fabian, my daughter's son-in-law, and we're the brain trusts of EG Tax, and we want to help you. And we have Dominic out in the field having people ask him questions. And so, Dom, what's our next question?
Hey Esther, we have another email coming in for you. This one says, I am an outside salesperson who uses my car every day. My employer can't afford to reimburse me for my business expenses because we are a small company. Where do I write off my costs?
Okay. Well,
You could
we
switch.
have good news and we have bad
Yeah,
news.
it's actually a very complicated question, but the short answer is you could ask your employer to switch you to an accountable plan, and that way they reimburse you for all those expenses that the federal won't let you claim anymore, but New York State will. So it's very complicated. So the short answer is ask your employer if you could switch to an accountable plan, and that way they reimburse you for all those expenses you used to capture.
let's kinda go back.
You used to capture on your federal return.
This person, under the old law
Mm-hmm.
on the federal, would have done a 2106 because they're an employee with business expenses. All those miscellaneous itemized deductions were eliminated under tax reform,
Mm-hmm.
okay? So, what Tiffany's saying is if you go to your employer and you say, Jack, I make $100,000 on my salary, but my business expenses are like 10, and I used to eat the 10 and take the 2106. But you aren't reimbursing me, and I can't write them off anymore. So how about if I give you receipts for everything on my $10,000 expenses, and my salary becomes $90,000, and you give me $10,000 in reimbursements, which would be tax-free. It's a win-win, right?
And you said that the employer reduces your salary a little
Right,
bit,
well,
right?
so he
Yeah.
goes from a $100,000 salary down to 90. He gets 90, and then he gets $10,000 in provable business expenses,
Right.
which are tax-free. 90 and 10 are still 100. He saves the FICA on the 10,000. He saves the income tax on the 10,000. It's a win-win situation. Now, that makes employers and employees go nuts because they say, that's something we don't understand. That's something we do understand, and we will help talk to your employer for you. But if you won't do it, then what the other thing is, on the state, on the federal you get nothing, but on the state,
You get to write
everything off. So when you do your state return, yes, you can take all your employee business expenses. On the federal, you don't get to take any. Our suggestion is that you go on an accountable plan, have your employer adjust your W-2 down so that whatever the expenses are that he isn't reimbursing you, you get that on the W-2, the rest is on a accountable plan, he's reimbursing you. The total equals your former salary, and it's a win-win situation.
Right.
And EG Tax will help you with that.
Sorry, and this serves a conversation, that part of the federal return that's gone, the miscellaneous and job expenses, with it also went brokerage costs that you would pay to your broker, tax prep fees. If you have a non-for-profit rental, those expenses are gone.
Hobby
If you have
losses.
hobby losses, in that section is gone for the federal, so many things. And
But
what were
on
you
the
going to say,
state,
Chris?
it's still in
It's
there.
still there.
But anyway, so that's the bottom line. And if you think that it's confusing to you, I want to tell you it's very confusing, and that's why you really want to make sure that you know that you have somebody in your corner that knows what they're talking about. So it's great to sit there on your computer and do your little thing, but if you don't know what you don't know, then you're not going to get what you're
You
supposed
got
to
it,
get.
Chris?
Yeah. No, what I was gonna say is, I think a lot of people coming into this year don't know what we're talking about.
I know they don't.
Because
It's
they
gonna
don't
take-
really pay attention.
It's going to take this whole tax season for people to go, whoa.
Oh, that's what you meant, because, like the over-the-road trucker,
Right,
they're busy out there in their
trucking.
18-wheelers going crazy, driving, and they're away 300 nights a year. They don't understand what's going on with
Right.
taxes. When they come to see us and we say, you don't have
Remember that $20,000 write-off you had last year? Gone.
gone. And so, your $5,000 refund is now a $1,000 refund. it's until they physically
Yep.
see the impact,
Right.
that's what I think people are gonna have. And
That's when I think they'll pay
right,
attention.
where
You're
we
right.
hope that people will start taking the IRS to court. Because if I was self-employed, I still could take my mileage.
That's exactly
I can
right.
Cell
still
phone.
take my uniforms. I can take my cell phone. I
Office
can
and
take
home.
all these expenses, but as an employee,
Right.
I can't. And
So it's
how
a
is
whole
it?
class of people. So here's expenses for producing income. If you were self-employed, it'd be deductible.
Yep.
The same expenses for producing income as an employee, not deductible, and that's what's so frustrating. Okay, Dom, what do we got?
Hi, Esther. We have another email coming in. This one says, I'm an over-the-road trucker. I work for a big company, and I am out of town overnight approximately 200 days a year. Should I use the per diem rate, or what I actually pay for expenses on my tax return?
Okay,
Well, that's a
well,
good
that
question.
Okay, so we were kind of talking about
Just
that.
talking
We
about
were.
it, yeah.
All right,
were.
so unfortunately, an over-the-road trucker who's self-employed, or fortunately, if this guy's self-employed as a trucker, he would probably take the per diem and he'll be able to reduce his expenses on his self-employment by that.
Right.
However, if he's an over-the-road trucker on a
W-2.
W-2, then he gets nothing on the federal, he would get everything on
And
the
so
state,
he might-
and he would take the per diem on the state.
Right, so he might want to talk to his employer about switching to an accountable plan, and that way they would pay him for the expenses. They'd short his pay, they would say the FIC and the Medicare, and then everybody would be whole.
That's right.
And so it's a conversation that you really,
Right.
really want to have.
I mean, the truth is, this year is such a transition year that so many people don't know how it's all going to affect them. And the important thing to know is you can call EG Tax. We're here to help you, and there's no charge for us to answer your questions.
And don't forget that the over-the-road truckers, you get the 80% of the per diem.
for
Right.
Department of
Not the
Transportation.
50%.
Like, that's correct.
Yeah.
Okay, so if
Exactly
you've
right.
only taken 50%, amend the return.
Right.
I mean, 200 nights at 70, that's $14,000. That's only, if you were taking 50, that's only 7,000 compared to
80, right,
you know,
80%.
And then don't stop keeping track of all your over-the-road expenses, because as we keep saying, New York State, you're still allowed to take these expenses.
And the other thing is as this unfolds, you may find that there's going to be a group of employees that do take the IRS, issue claims and start fighting this legally, because it seems to me unfair that somebody incurring expenses to produce income is able to take it if they're self-employed, but if you're an employee, you can't take it. So,
And you know, be careful, because I'm sure there might be some employers out there that will go, you know what, Esther, we're gonna do you a favor. We're not gonna give you a W-2, we're gonna give you a 1099 and make you self-employed.
But they
okay,
aren't
but
allowed
you
to
really,
do that.
but
Can't do
and,
that.
and okay, and
But
that.
I'm just saying,
All right,
that's
so
why they
that
gotta be
becomes,
careful.
and that becomes
Rub.
the thing that people want to do is they would love you to be self-employed, but unfortunately, there's common law employee rules, which says that if I exercise control, I tell you where to come in,
where to
I
when to
provide
take a
you with
break.
the supplies, I do the training, you can't substitute who's doing the work. You're an
And
employee,
you
you
don't fit the
can't
bill.
just give somebody a 1099. That employer would end up with a big
Big
problem
trouble with New York State.
with New York State
Yeah.
and the federal government,
Yep.
right? Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. EG Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family. Why is it when we think of our family, we always do what's best for them? Like when there's a problem with your kid's teeth, you call the orthodontist. Problem with the car? Call the mechanic. So why, with the largest tax law change in decades, would you even think about preparing your own tax return yourself? A mistake could cost you thousands. EG Tax has studied these tax law changes since their inception. We're going to work hard to make sure you get the biggest refund possible this year. Come join our family.
During a hurricane in North Carolina, I had a $300,000 house totally demolished. Is there anything I can do tax-wise, because I only got $150,000 back?
Okay, of course, casualty losses are still in effect, even under tax reform. And as long as it's a federally declared disaster area, which I know it was, then you qualify for a casualty loss, which would be the fair market value just prior to the casualty, the hurricane, less what it was worth after the hurricane. So if it was worth $300,000 before, if it was worth $100,000 after, because the land has a value, that's a decrease of $200,000. If they got $150,000 from the insurance company, then they end up with a casualty loss of about $50,000 less the 10%
Yeah.
adjusted gross income.
And then I just want to talk about, I have some clients who took advantage, or sadly, of the Lake Ontario casualty loss, and I've been getting phone calls in the summertime because they actually
They
got
got money.
back.
The
Yeah.
state really did cough up with the
state
cash.
really did cough up
It only
with the
took them a
cash.
year, but they did do it.
And so they wanted to amend their 2017, and I said, no, that's an event
And when you
that
get
we're
the
going to
income.
do
Right.
on their 2018
Right,
return.
right. So anything on the casualty we should
No,
talk
you
about, Chris?
just got to remember, like you said, the only time you can claim casualties now is on a federally declared disaster.
But not on New York State.
But not on New York
On
State.
New York State, you can do it. So, I mean,
But what this means is, if your house burned to the ground, hate to
Right.
say that, but that does happen. On the federal, they say, we don't care.
yep,
You know, sorry, you lose.
right.
But on New York State, they're gonna let you still take
Right.
the casualty.
So what you're seeing here is that the federal government, because they stepped up the itemized deductions and eliminated the personal exemptions, they're saying, okay, so we're not going to let you take this, we're not going to let you take this, we're not going to let you take this. And the state of New York kind of said, well, gee, because this is a high tax state, our people are really getting chopped in the neck, right? So the state of New York, to counterbalance this, they said, well, great, we're going to let you take everything that the federal government is not going to let you take. So in effect, you're going to have to do two separate tax returns with two completely different sets of rules, and the state being very liberal, the federal not so much. I'm Esther Golias, the tax lady from EG Tax. Remember, when you're struggling with this year's all these changes, EG Tax is there. I mean, sometimes, you just think, who can I get to help me? Hey, Ask the Tax Lady will help you. EG Tax will help you. You can go to our website at egtax.com. We're always there to help you. Until next week, I'm Esther Golias, the tax lady. Have a great one.